So, welcome to this session about early stage funding for startups. This is a session that the theme of this session actually came out of a suggestion of one of our previous viewers. So, if there is any subject that you would like more attention to, or that you would like a session that we would dedicate a session to, please do let us know. Also, please let us know where you are connecting from, and just say hi in the chat. We always like to know who is watching. And let's start presenting ourselves briefly. I guess. Do you want to start, Leon?
Sure, thanks. Yes, I will. Hello, my name is Leon. I help early stage startups with my YouTube channel, only in Spanish right now. And I've been a mentor for startups in the last 8 years and seeking for very great collaborations like I'm doing right now with Inge. I have been an entrepreneur, I am an investor, and I mentor over 5 accelerators. So today we're going to talk about funding for early stage startups, which is a common topic that most of the early stage entrepreneurs are very concerned about. And happy to do so with Inke. So if you want to present yourself.
Yes, of course. So my name is Inge, and I used to live in Colombia, and I did a lot of work on entrepreneurship over there. And from that experience, I've created a coaching tool and an education tool, which is called the Playground for Entrepreneurs, which is a serious game to be used by coaches and educators, either in the classroom or in workshops and sessions with their entrepreneurs. So, as we're going to talk about early stage startup, let's first define some terms. Sometimes people can still get a bit confused between different types of investments, early stage investments. So let's first get that straight, and then continue with what's important at this early stage funding, both for the entrepreneur and also for the investor. Actually, the relationship between the two. So when a project is starting, when a startup is starting, at the very, very beginning, the investment is usually done by friends, families, and fools. So FFF. So basically, anyone within your close circle who you can convince to invest in what you're doing. Very often, it's not too much about your idea, but rather a support from people who believe in you. So it's really about you and not so much about the idea. And this is investment, very informal investment, so it can basically serve any purpose. Then after that, when you get to a certain point, you can start finding a business angel, an angel investor. An angel investor is an individual who's investing their own money, and they're investing it in some sort of idea that's already at some stage running. Something is already happening. There's usually already revenue, often recurring revenue, and they're focusing on scaling it up. And this is a very personal relationship. It's really about helping and investing at the same time. Then after that, there's VCs. So VCs, there's a lot of talk about VCs online and on social networks. Venture capitalists are really funds. So there's a business behind this. And as there's a business behind this, there's also a very strong focus on results. So these people, this is a company that's going to get a part of your project, and they are focused on results. So they're going to be very detailed about the finances of your project, of your startup, and they're also going to be in the board of directors. So they have some decision power there. Probably not the majority, but they do have decision power there. And that's basically what a VC is. Then afterwards, you get all sorts of investment rounds, but that's really not early stage anymore. So we're going to go until venture capital in this session.
Right. I think you did great explaining exactly why each one is important at the different stages. I would like to stress that a little bit more because it's very important that the first people that you convince to invest in your projects are the ones that know you the best. Why should I invest in you? I know you for a long time. I have a relation. I can trust you with my money. It's another way to show an investor that you have the ability to attract investment from your circle. If you are not able to attract investment from your circle, that's not going to be a great sign. I mean, you don't actually need it 100% to be like that, but it's always good to have that sort of validation in front of the next round of investors that will be the business angel. So typically those triple F, friends, family, and fools, well, it's pretty self-explanatory what that is, how does it go. The thing is that some entrepreneurs are concerned that they can kick out or repurchase those shares from those triple F once the company moves on. Because once it moves on, you will want to have a light cap table or a clean cap table. Cap table are the investors that are in your company, the conditions that each one has. And as you move on, that gets pretty complicated to manage. So it's a good idea to have some kind of repurchase scheme in order to clean that out. It's not your first priority, but it's something that you must have in mind. And once you show that you are able to get results, the business angel will kick in, and you will try to find this money in a more professional way. They will ask for metrics. And most of the time we see entrepreneurs asking for money to fund their project. And we'll ask them, okay, what kind of metrics do you have? What kind of results? Metrics are the results that you can show, right? So these are my sales. That is an actual metric. It's not good to say, well, I have such and such social following. That's a vanity metric, actually. That's not the way you can measure progress. So that's where the business angel is going to look for those numbers. Mistake that some make that we were talking before is that you say, I need money for my marketing expenses. I need money for my development expenses. Have you shown any progress, any signs of progress, any signs that those people want to buy your product? If you don't have those metrics, it's going to be a very hard sell for the business angel. Just think about, I mean, Inka, what do you think, the business angel, if I come up to you and I said, Inka, I'm going to make you rich, but please give me money first?
Well, I would expect some sort of convincing metric in order to do that, really. So the business angel already, because it's their own funds, right? It's their own money, and they want to make it more money. And of course, they want to do exciting things. So for most of them, it's really a mix between exciting projects and something that they're really passionate about, or at least interested in, and money. They do want money out. So a business angel is already going to ask for a product market fit. They're already going to ask, what proof do you have that your customer actually wants to buy this? Right? How many have you found that will actually have paid for this, that have actually invested, well, in terms of a purchase, in your product, in your service? So that's really important. Then something else I want to stress is investment should be used to scale up, not to operate.
But
right?
doesn't every investment scale up?
Well, hopefully, there's a lot of people, there's a lot of, especially where investment is kind of fashion, a lot of like hot startup environments where sometimes investors get carried away as well and, well, invest in startups that might not necessarily use it to scale up, but rather to finance their operations. That's not the point. And right now they're speaking of an investment winter. Investment is going down in all funds basically. So it's really about building a sustainable business model. You don't have to make a profit yet when you deal with an angel. They're not going to ask you necessarily for a profit, but they are going to ask you for some sort of indication that it's going to be profitable and that there's certain scale to it, that you can scale it up. There's a vision and there's enough customers around that can be convinced, and that the growth metrics are working, so that it's growing at a steady pace, and their investment is going to be used in order to grow, in order to scale up. So every time you put $1 in and you get $7 out, that's when you can go to an investor. That's when you can really have the power to convince this investor this is going to scale up, and this your money is going to make us reach more people. Every time we put one in, we get 7 out. Well, do the math, really.
I think those unit economics, right, are what dictate what we are doing. Those unit economics are the metrics that speak about what an individual customer or an individual action can do. So, for instance, the income each customer brings in, that would be part of the unit economics. The acquisition cost, the client acquisition cost, would also be part of those unit economics. And it's what investor is the easy way that investors have to know what Inge was talking about. Hey, are you profitable? Where are you efficient, or why not? Because it can also speak about how you are conducting your operations. One very important metric to determine the value and the scalability of a business is the churn, the people that are not coming back to your service, as opposed to the people that make a repeat purchase. Since we are startups, we are scalable. Usually we use software, so the cost of bringing in a customer, well, might be an ad or I don't know, publicity stunt or whatever. But once that customer comes in, if he's able to stay for a long time, and we can actually make bigger tickets on it, then we can show the investor that we are making progress. As Inka said, maybe we're not profitable. Usually startups are not profitable at the beginning, but if you show that you are sticky, that people want you, and that they will stay with you for the long term, that they're nuts about you, that they can't live without you, that's the indicator that investors want to see. Of course, you'll be having other expenses that you will have to take into account. Are you making things right? Are you making things wrong with the rest of your expenses? That's also, I think, an interesting part of the next rounds of funding, is because you can have that counseling by them. It's not their job to be counselors, at least not the business angel. VC usually counsel at a higher level, at a, let's say, if you are a logistics startup, they will teach you, well, they can tell you about how the logistics is moving all around the world, their connections, problems they have solved in the past. So that's a bit of the difference between those three different kind of investors that we have. Ones do it for fun, ones do it because they love us. The other ones are a bit different because every angel investor is different. And finally, we have those VCs that go to an institutional level, that take a seat on the board, and that have all these wild connections that can help you scale a lot.
Definitely, yes. I would like to emphasize also the relationship with particularly an angel, because for an angel, it's really something personal, right? It's their own money, it's their own experience. They build a relationship with the entrepreneur, and they can really add a lot of value just other than the money, right? The money helps, but there's a lot of things that they can usually add. So let's start. The business angels are those typical people that you see on shows like Shark Tank and Dragon's Den, the ones that sit in a chair and the entrepreneur comes in, they do a 5-minute pitch or maybe a bit longer, and then they connect and they make a deal, right? Then after that, there's actually a process called due diligence, in which everything the entrepreneur mentioned in the pitch should be documented. So if you say you make sales every month, then you should prove that you have those sales every month. The structure of your company, the equity structure of your company, you should be able to sustain that on paper during the process afterwards. Because also the business angel, it might be something personal. They don't want to lose their money. So they make sure, they make as sure as possible that whatever you say that you have done or are doing or have that you've reached in your business, that that's true. Now, the angel itself, themselves, they usually are business people themselves. They've probably had a couple of startups themselves. They've been successful in business. Maybe they've had failures as well. Probably they've had failures as well. They know what business is all about. Usually they have a preference for a certain industry, or they have a certain interest, and they usually choose something that will make them money, but they're also passionate about or interested in. And in that industry that they already have experience, they can add a lot of value, right? So as Leon mentions, if it's logistics, then that person can really help you and guide you and support you taking the next steps for a logistics company. Make sure that's quite aligned, that this person has the experience in the industry that can really add value to your business. So if somebody is an expert in chemical products and knows everything about chemical products, and your business is in tourism, then it's not going to work because they don't have the right contacts or knowledge, or they don't know how the industry works. And basically, it's money and nothing else that they're giving. Make sure that person has some experience that's aligned, and also make sure that you know how much time and interest they're going to dedicate to your business, just to avoid expectations that don't match later on.
That's important what you said. I read the book by Calacanis about angel investing, and he said that one of the things that a founder should do is to do the due diligence on his business angel, because it's also a part of your startup is going to have hard moments. That's for sure, and you want to know what kind of person you're bringing into the company. Is he going to be the supportive kind of person? Because, hey, some founders want or actually need a supportive person by their side. Others don't want that kind of investor. Others don't want you sticking their nose in your business, just give me the money and that's about it. So you, just as you pick a co-founder, just as you pick any relation in life, make sure that it's aligned. Go look for other founders that this angel has. Ask them how the relation is, how it started, what happens when things aren't going fine. That's the kind of information, that's the kind of validation that is wise to make when we're choosing between a business angel. Okay. And another thing you mentioned before is when the angel says, yeah, I'll make you all sort of introductions. post your product in these sites or put them in these stores on these shelves. And usually that is not, there's no written letter about that. Nothing is signed about what the investor said he was going to do and actually did. So make sure, just as we make commitments with our metrics and where we want to go, make sure that if this happens on the investor side, especially on the business angel, you get some kind of assurance. Don't let them make a lower valuation just because he's going to bring more expertise. That is called smart money. We have circled around that concept. He has just said it. You don't only want money, you want someone that is that knows what problems you're going to go through, how to solve them, and has the right connections. Usually at a VC level, this is much more structured, much more profound, because business angels can go so far, whereas venture capital have entire teams doing this. So that's part of the differences, let's say, that you can find. It's also interesting to know what kind of connections does the business angel have over him, like which VCs can he work with, other VCs, what other connection, what other investors, because hey, sometimes you go through one business angel, but then you go to other business angels. You don't directly go to the VCs, right? There are super angels, and there are all kinds of other investors that can fill an intermediate round, right?
Yeah. Yes. There's all sorts of like in-betweens that have emerged that you can, like the super angels that you mentioned. There's a couple of other options of financing. This is just like the main group, the biggest groups that you can occur to. Now, you might also not have one angel. You might have a couple of angels. Now, something else that I would like to emphasize is bootstrapping. I always tell my entrepreneurs, wait as long as you can before going to an investor. Now, the investment is to scale up, but the better, the more robust you can build your business model, the more you can prove to your investor that it's working, the stronger your position to actually negotiate with them. So they have lower stakes of equity, so they invest more money in your company. The longer you can wait, the better. So how do you finance? Well, bootstrapping. So bootstrapping has become a fashion. In Latin America, it's always been a fashion, really. Investment is not laying around.
The way, rather than a fashion, I'd say it's the way to go, right?
Yes, it's the way to go. Just until you've got something sustainable, something that makes you a sustainable revenue. And that's, as far as I'm concerned, for the majority of projects, for the majority of startups, the way to go as well. Because then you can really develop your business model, build a sustainable, proven sort of business model. Maybe not profitable yet, but at least sustainable. Now, what's bootstrapping? Bootstrapping is basically living off your operational income. So you're figuring out your business model, you're doing all these experiments in order to get to product market fit, to find the best opportunities in the market. That's what you're doing with bootstrapping. And basically, for a lot of things, and usually it's more things than entrepreneurs take into account, you can do that without a lot of financing. You can prove a lot of hypotheses, do a lot of experiments without investing major sums of money. So as long as you can do that, then try to do that first. And then when you can prove it, then go to the angel, and then go to the VC, and then take it away.
Yeah.
But first, focus on building that business model, and the way to do that is bootstrapping, really.
Yeah, because that major dollars for marketing, major dollars for development means that you already are going to serve a major market. Now, no business has started by serving a major market. I mean, not even the big companies that we know today have started that way. They actually started, as soon as you look at the history of those companies, you figure out very interesting business model, and they were very scrappy. There was a lot of grit there because people had no resources and did as best as they could with something that was completely wild. As you said, serve that small niche first. Get it over. Show that you can be profitable there. It's not profitable, sustainable, as you said, okay? That the cost of acquiring a client, those unit economics, the cost of acquiring a client is lower than the revenue that he will give you throughout the years. Now, what's the matter if you spend $20 to acquire a client, but he only gives you $2 a month? That might not seem sustainable. However, if your churn rate is just 1%, if only 1% of your customers leave, you are showing that the value that client will have during all his life with you, all the lifespan of that client is going to be huge. So that is when you have that kind of financial issue, is when a business angel is glad to put dollars into your marketing expenses, into your development expenses. But the first ones, the first market, the first customers, you got to show that you have what it takes to take the company to each different level. That's something that's going to happen throughout your startup's life. And we're running short on time, so I really want to do a short mention to the legal aspect. I would like to say that it is very important to seek the best legal counselor possible in this aspect. Screwing up at the start could mean lots, thousands, millions of dollars if you do things right on the business side. So keep this in mind. It's someone, as we said, smart money for the business angel. This is a smart investment because they will help you. They solve problems before they happen because they have seen it with tons of other entrepreneurs. And another good thing I like about lawyers, they're smart people that will always be on your side, not on anyone else's side. And that's great counseling.
Yes, definitely. And very important because in terms of legal issues, in terms of investment, a lot of things can go wrong. So when you get to not maybe the family, friends, and fools, but when you get to angels or when you get to venture capital, make sure you have an expert giving you advice on how to do that and how to actually set up a contract and due diligence and everything. Okay, so I think it's time to wrap up this session. It was great being with you today, and please do let us know. Let's repeat that message from the start, that if you want a certain topic to be treated on these sessions that we're doing with León, please do let us know. Write us a message or a comment or anything so that we can actually. And this session actually was the result of a comment that somebody made asking for a session about early stage financing and investments. Well, that's what you get when you ask, right?
Exactly.
So let's wrap the session up. Please look for and subscribe to León's YouTube channel. Until now, it's only in Spanish, but you can find a lot of information there, interesting information about startups, about how to really improve the way you're working on your startup. As for myself, the Playground for Entrepreneurs is a gamified coaching tool. It's a serious game for coaches to use or for entrepreneurship educators. So very soon we'll have an interactive demo. You can attend that, or you can write to me directly on LinkedIn or on social networks. And we're looking forward to hearing from you.
Exactly. Thanks, Inge. It's been a pleasure, and thanks to all of you for being here. We're looking forward, as Inge said, from hearing from you, and please let us know any topic. It's always great. This is a startup freestyle, right, Inge? So as soon as you have any doubts and we feel comfortable with our area of expertise, we will track it down. Okay. So. Inge, I guess we'll be seeing each other maybe in a couple of weeks.
Yes, we will. Yeah, So have a great evening, have a great afternoon, depending on where you are. And thank you for attending this session.